If you have been investing in the index funds thinking you are playing it safe, you might want to check what's actually inside that fund, because right now just 10 companies make up nearly 40% of the S&P 500. That's the most concentrated it's ever been. And when the top is that heavy, it doesn't take much to topple the tower. Today we are going to break down what this means for your money, whether index funds are still safe, and if now might actually be the time to go stock picking instead. Let's get into it. A new chart shared by the Kobasi letter shows the top 10 S&P 500 stocks now make up to 38% of the index market cap. They also earn 30% of the S&P 500's total profits. This way, above the 2000 dot-com bubble, where the top 10 peaked at 27% market cap. It's not a broad market anymore as people believe. It's a big tech ETF with extra steps. So what is the problem? When your fund is this top heavy, you are no longer diversified. The whole market moves based on the earnings of a few names. One earnings miss from Microsoft or Apple and your diversified ETF gets whacked. It's like betting on a football team, but 90% of your bet is on the quarterback. If he gets hurt, game over. Now let's address the obvious question. If the S&P 500 is basically just 10 tech stocks, should I just buy the best one individually? It's a fair question. The argument goes, skip the underperformance in the index. Focus on high growth names like Nvidia, Apple, Microsoft, Amazon, and Google. Capture more upside without the baggage. And to be honest, for investors who do the homework, this strategy could work. There is a trade-off. What is the reward? If you pick right, your returns can blow the index out of the water. You're not diluted by lagging sectors like utilities or banks. But what is the risk? You concentrate even more risk in a fewer names. And unless you're truly confident in valuation, leadership, and execution, you could be jumping from one bubble to the another. Also remember, picking winners isn't just about knowing what to buy. It is about knowing when to sell. Index funds rebalance automatically. Individual stocks, you are the captain now. So if you're going to stock pick, do it with a framework, not FOMO. Here is what I recommend considering for myself. Rebalance and check your exposure. If 40% of your diversified ETF is just 10 companies, you might already be overexposed. Mix index funds with real assets like gold, silver, and Bitcoin. Anything not tied to earnings report from the Silicon Valley. If stock picking, think long-term conviction, not hype. Look for companies that will still matter 10 years from now, not just 10 months. Have a macro lens. Understand how interest rates, fiscal policy, geopolitics impact the valuations of these massive tech firms. That's why I created my macro fundamental course to help you learn how the system really works so you can invest with eyes wide open. Link in the description below. And if you want daily signal, not noise, join my WhatsApp community. We talk investing, inflation, and how to survive the madness of modern markets. Link in the description below. Because whether you are holding the index or just a few tech rockets, you need to know what game are you playing. On that note, hit the like button and subscribe to the channel and share this with someone who still thinks index funds are low risk. See you in the next one. I just wanted to let you know that I also offer one-on-one consulting calls to the individuals who are looking to discuss their financial planning, their investment strategies, their kids' education planning, their immigration moves, as well as the young professionals, because I have been in the tech industry for almost 20 years. So I also offer one-on-one consulting calls to the young professionals who are looking to have their career development discussion with me, and also personal branding as well. So if you are looking to have some sort of an expert opinion, there is a calendar link in the description below. Book a 30 minutes call with me and I will be more than happy to help you out.